Hey traders, Raghee here, and in this update we're going to dive into the NASDAQ. Now if you've been following along in the videos here for Simpler Futures or joining me for Charts and Coffee, you know that my favorite index to continue to focus on the short side is the NASDAQ. Now a quick refresher, why? Well, we should always start with the structure of the market that we want to trade, and that's going to start with grab candles, dominantly red. What is the structure of the moving averages that dictate the trend? They've been bearish to neutral. It's okay if the market goes neutral if before that neutral behavior we had a little bit more traction, either bullishly or bearishly. And in this case, clearly the traction has been bearishly. So we would call this a bearish neutral environment, one that would be ripe for shorts. All right, the next thing we want to ask ourselves, and we've talked a lot about this in previous videos, so it's always a great reminder, we are south of that equator. We are south of the 200 propulsion. Think of that 200 exponential. Use that propulsion indicator because it's going to give you an accuracy better than the exponential. If we're below that, we're in the bearish hemisphere. We're south of that equator. So this just gives more traction, more edge in terms of bearish sentiment to sellers like myself. This will be the second time we're shorting the NASDAQ in really less than a month. And the idea here, now I know a lot of you are going to take one look at that NASDAQ initial margin and just say, oh no, right? It's extremely expensive. Micro is fantastic. It's going to give you the ability to enter this trade, scaling in as we reach the different targets and not need as much initial margin. That's the amount of money you need to hold this trade overnight. Now, of course, we talk a lot about choose your own adventure. So sure, QQQ puts, even NASDAQ futures puts are perfectly valid. Being long a put is usually far less expensive than the initial margin of the contract, and you know that your risk is absolutely no more than whatever you paid for that option. We never recommend going to max debit with the kind of trades that I set up. However, you know, worst case scenario, that is the maximum risk in terms of the value of the option, what you paid for that you have. So we hit the 21, the resistance of that 21 propulsion, and that has started the aggressive level for expectations to the downside. And you can see how we put the grab candles together, the JT trend flags together, the rally into the wave. Also, look at what else coincided with that. Right here, a Darvis 2.0 level. Now, if you are still looking at how to put this together and how we've been doing with these indicators to find trades just like this. Remember, this is coming just around the corner. March 9, a week from yesterday, we're going to be having our webinar March 9, 8 p.m. Make sure you head on over to countdowntrader.com. Get these free indicators. This is not going to be a conversation about what indicators you need. You're already going to have them. It's going to be a conversation of what can you do with them? What are they capable of allowing you to set up? Shorts like this. The last time we set this trade up, just to give you a little bit of perspective, was right in there. So you better believe I'm excited for another opportunity to do that again. Quick heads up, non-farm payroll at 8:30 a.m. tomorrow. I will see you on March 9, next Wednesday, for our webinar. Grab the indicators from Countdown Trader in the meanwhile, and I will see you all in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.